Welcome to The Explainer. Imagine opening your mail, pulling out your health insurance renewal notice for the year, and just staring in absolute disbelief at a number that has roughly doubled from what you paid last year. Well, millions of Americans are experiencing exactly this gut punch right now. And it's not because they got sicker. It's not because their plan changed. It's actually because a crucial government subsidy quietly expired. So today we're breaking down the massive fight that is literally tearing Washington apart over how to fix this. We're going to look strictly at the economics, entirely without the political spin. To put this into perspective, we are talking about an average annual premium payment jumping from $888 up to $1,904. That is an absolutely brutal hit to everyday household budgets. Think about it. For an average family, an unexpected $1,000 expense easily equals a full month of groceries or a huge chunk of rent, just suddenly vanishing from their bank account. So the core question right now is how we address this massive premium shock, and two incredibly different economic philosophies have emerged to tackle it. Okay, let's dive into this. Here is our roadmap for today. We're going to cover the premium shock, the mechanics of subsidies versus HSAs, the cases for both sides, and finally, the hybrid compromise reality that most headlines completely miss. Section 1. The insurance premium shock. To understand why bills are suddenly doubling, we have to look back at the recent historical context to see exactly how we arrived at this spike. Back in 2021, right in the thick of the pandemic, Congress temporarily boosted the Affordable Care Act's premium subsidies. The goal was emergency relief. More people qualified, and the subsidies covered a much larger share of the cost. This got extended in 2022, and as a piece of emergency relief, it worked beautifully for enrollment. The numbers on the ACA marketplaces hit record highs, pulling in close to 24 million people who now had affordable coverage. But here's the catch. That enhancement was always explicitly designed to be temporary. At the end of December 2025, it hit a completely predictable cliff edge, and it expired.
And wow, that expiration didn't just affect personal wallets, it caused a massive political crisis. The fight over what to do next was actually a major driver of a grueling 43-day government shutdown. The gridlock was just severe. The Senate voted down a Democratic bill to extend the subsidies, and then immediately turned around and voted down a Republican bill built around health savings accounts. And while the House actually managed to pass a 3-year extension of the subsidies in January, it remains hopelessly stalled in the Senate. The juxtaposition here is staggering. While politicians in Washington remained utterly gridlocked, families across the entire country were forced to scrape together the cash to pay those doubled premiums in real time.
Part 2. Mechanics. Subsidies versus HSAs. Let's strip away all that legislative jargon and actually define the two main tools proposed to fix this premium shock. First up, what exactly is an ACA subsidy? Technically, it's called a premium tax credit, and it works like this. Based on your income, the government pays part of your monthly premium. The less you earn, the more of your premium gets covered. I want you to think of it exactly like a coupon that's automatically applied at the cash register at a grocery store. You never actually hold the cash in your hand. The final price at checkout is just magically lower. The money flows straight from the government to your insurance company. It's strictly a tool designed to shrink your monthly bill. If you don't use it, you don't keep it. Now let's explore a completely different approach, the Health Savings Account, or HSA. This is a personal account that you own, and it boasts what financial planners call the absolute holy grail of finance, the triple tax advantage. Money goes in tax-free, it grows tax-free, and it comes out tax-free, as long as you spend it on qualified medical expenses. The catch is that you have to be enrolled in a high-deductible health plan to contribute. But here is the magic of an HSA. It gives you a tax-sheltered cushion for actual tangible care. And if you don't spend it this year, the money doesn't vanish. It rolls over. It stays yours, potentially compounding for decades into a massive health nest egg. This represents the core philosophical debate of our entire explainer. Are we subsidizing monthly demand, or are we building a long-term supply of personal savings? Subsidies solve the immediate problem of high monthly bills by sending money straight to the insurer in a strict use-it-or-lose-it model. HSAs, on the other hand, solve the problem of unpredictable out-of-pocket care costs by giving you money that rolls over yearly. One aims to make the monthly fixed cost smaller, while the other aims to give you a cash cushion for when you actually experience a medical event. Part 3. The case for ACA subsidies. Now that we understand the tools, let's look at the strongest arguments from the lawmakers fighting to permanently restore these premium tax credits. Supporters of the subsidies point straight to the data. When the enhanced credits were active, uninsured rates plummeted to historic lows. The core critique of the alternative from this side is that HSAs are basically useless for people living paycheck to paycheck. right? If you don't have spare income to put into a savings account, an HSA does absolutely nothing to help you afford a high-deductible plan. Let's picture a hypothetical lower-income worker, say a retail employee who relies on daily asthma inhalers to stay healthy. The subsidy allows them to afford a plan covering those daily inhalers. Without it, they might skip a medication, which can quickly lead to a severe asthma attack and a highly expensive emergency room visit down the line. By keeping people steadily covered, subsidies act as preventative care, which supporters argue fundamentally pays for itself by preventing those costlier chronic issues.
Part 4. The case for HSAs. Now, let's move to the other side to give perfectly balanced time and energy to the HSA first arguments, which fundamentally rethink how healthcare dollars should be managed. Supporters here argue that sending government money straight to insurance companies completely removes any incentive to control costs. Instead, we should put consumers in charge of their own money, which in theory curbs inflation. They also cite estimates of billions of dollars in fraud and waste within the current subsidy system. Stuff like people misreporting income or being enrolled without their knowledge by agents chasing commissions. Plus, HSA funds are permanent and they're portable across jobs. But the biggest argument here is behavioral. When it's your own hard-earned money on the line, you're much more likely to pause and ask your doctor, hey, is there a generic version of this medication? Or do I really need this expensive imaging test, or can we start with something less invasive? Proponents argue high deductibles force patients to act like true consumers.
But we definitely have to be clear-eyed about the critique here. The reality is, most people simply don't have the medical knowledge to shop around for an MRI the way they'd shop for a flight on Expedia. Critics warn that high deductibles might not create savvy shoppers at all. Instead, they might just cause terrified, overwhelmed patients to skip necessary medical care altogether out of fear of the upfront cost. And that exact tension is why this debate is so fiercely contested in Washington.
Part 5. The hybrid compromise reality.
Okay, so here is the twist. Behind closed doors, lawmakers aren't actually treating this as a strict either-or scenario. Despite the incredibly polarized public shouting match we see on the news, we're actually looking at an illusion of choice. The secret compromise currently being quietly negotiated is about blending both of these economic tools together. It turns out we might not have to pick just one side. There's this quietly negotiated proposal for early 2026 that would utilize a really clever glide path. It would extend the premium subsidies for an initial 2 years to prevent immediate shock. Then, in year 2, it would smoothly shift a portion of that financial support directly into an HSA instead. This is politically palatable because it gives the left the subsidized coverage they want initially while giving the right the consumer-driven HSA mechanics they prefer long-term. It also includes an income cap so higher earners lose eligibility. Now, as of recent reporting, these negotiations have stalled, but notably, they stalled over completely unrelated bill provisions, not the HSA concept itself. Health economists largely agree that a system relying on just one tool is always going to leave massive gaps, making a blended glide path the most logical endpoint. So what does this all mean for your wallet right now? Well, if you buy marketplace insurance, the practical reality is you should expect higher premiums this year unless Congress acts retroactively. And let's be honest, that rarely happens quickly. You really need to actively run the math for your own household. Take your premium difference for the entire year. If your premium goes up by $1,000, compare that $1,000 hit to your expected out-of-pocket medical expenses. You've got to check whether taking on a high-deductible plan paired with whatever HSA tax advantages you're eligible for actually works out to be cheaper than simply paying the doubled premium for a lower deductible plan. I want to leave you with this final, completely provocative thought. As we look at the big picture of the US economy, the central tension is really this. Should healthcare policy try to control costs by subsidizing demand or by giving consumers the tools to control spending themselves? That is the billion-dollar question that isn't going away, regardless of what happens with the specific piece of legislation. I am genuinely curious to hear where you land on this, so definitely drop your stance in the comments. And if you found this deep dive helpful, be sure to subscribe to this explainer series for more objective, thoroughly researched breakdowns. See you in the next one.